Hello and welcome to the 2026 Tax Return Commitment Club launch party, where we're going to be sharing all of the challenges that you have around completing tax returns and the obstacles and how you can get over them. Let's get started. So, hello again to those of you that were here a moment ago, and hello to those of you that have just arrived. We've got loads of people coming in. Afternoon, Heather. Hello. And Joanne's in the room as well. You was first in the room, Joanne, when I opened it up a minute ago. So, well done for being at the front of the queue. Anyway, yes, welcome to the 2026 Tax Return Commitment Club launch party. It's that time of year again when we're starting to talk about and think about how we are going to have Christmas off and a more relaxing January, i.e., by having all of the tax returns or 90% of the tax returns out to client for signature by the 30th of November. As always, please feel free to ask any questions as we go along. Pop them in the Q&A box, and I will gladly answer them as we go through. And if you've got any observations or any ideas, or if you've been a part of the club before and something's worked for you successfully, then pop them in the chat box so other people can share. As I always say, I love the stupid questions. I've already got 1, 2, 3, 4, 5. I've got 6 questions. Oh no, I only got 5 questions already preloaded up around how to get information in, how to get records on time, how to prioritize tax returns over other important tasks, how to get the team on board, and how to change the client mindset around urgency. And there's some really simple, quick wins that I'm going to share with you around all of those today. But as I say, as I go through, if you've got any questions or any observations, please pop them in the Q&A box or pop them in the chat box. And at the end of today, if you're not in Bounce or Evolution, there'll be an invitation for you to join and come along and have a play. So let me, without further ado, share that. And hopefully you should now be able to see the slide deck that I'm going to talk you through today. And here is the agenda. So we are going to have a look at the problems that you've got, the core problems that you've got. And again, if you're in Bounce or in Evolution in particular, you'll know that we spend quite a bit of time making sure that you're dealing with the right problems before you come up with a solution, because those core problems, the quality of the problem definition, then helps you identify the pain that you've got. And if you don't analyze and work out what the problem is that you've got, then obviously you won't know where the pain is coming from. And we're then going to have a conversation around what most accountants actually want from their tax return commitment, from their tax return process. And sometimes that's sort of self-defeating, but we'll have a look at that. We're then going to go through the obstacles, the important bit of the session. So what's basically stopping you from getting your tax returns completed earlier. And then ultimately how the Tax Return Commitment Club, the things that we do within the Tax Return Commitment Club, help you get over those obstacles. And I'm not going to go through a whole list of features and benefits and all that sort of stuff. I'll give you the broad brush of how it works. But ultimately at the end, as I say, you're going to get an invitation to have a conversation with Mark in order to work out whether the club is for you or not, because it's important for us to protect the integrity of the group and only have people in the group that are right for us and the way that we work and are actually going to do something about what it is that they have got a problem with. But anyway, that's where we're at today. That's the agenda. And as I keep saying, as I've said, if there's anything you want to ask, then please pop them in the Q&A box. So let's have a look at the core problems that you are suffering from. And if you can think of any other core problems or any other problems that you've got, again, pop them in the chat box. But these are the summary ones that we've come up with. There's 6 of them. So clients do not send to you what you need when you need it. And this is the fundamental one. Now, there's all sorts of reasons why this might happen. But the fundamental thing, and the one that people moan about the most, is that you can't get the information out of the clients when you want it. And then in addition to that, the clients leave everything until the last minute. So you end up running around in January, December, January, in order to make sure that your clients are looked after. So they're the big two, if you like. You then have a situation where work arrives randomly. So it might all turn up at once, or you might not get anything in, or it might all turn up in September after everybody's been away on holiday. So it's all over the place. So there's no real planning. You can't have a capacity situation. You can't do any capacity planning, and you end up with stuff coming in all over the place. Another one, which is a bit sub-level, this is, or sub-service level, is that you believe all clients are the same. And we have this, again, we have this conversation all of the time within the Commitment Club around where it's like, none of my clients bring the information in, or all of my clients leave it until the last minute, or no client's interested in what I'm saying. All clients speak to Dave down the pub. You have this belief that all of the clients are the same. And as you know, when you think about it rationally and consciously, all clients are different, and some clients just need a little bit treating slightly differently to other clients. You believe it's just how it is. So again, it's probably not the right fit for the club. But if it's just going to be like that, if it's always going to be busy in December and January, and you don't believe there's the opportunity to change, then best you stay where you are and not take part in the club. And a lot of people, a lot of accountants actually like the pressure, even though they moan about it. It gives them an adrenaline rush. There's a dopamine kick that comes with it. It gives them the ability to work late, gives them something to talk about when they go down the pub with their mates, gives them something to post about on LinkedIn. There's like a camaraderie to it, to that community pressure, and we actually, some of us actually quite like it. And if I go back to the heady days of the early 2000s, I was in that camp. I remember going through and working all hours and going home and having a glass of whiskey as a reward, and working Saturdays and Sundays and buying pizzas for the team, because the whole team's in on Friday night at 7 o'clock. So we have team pizzas. There's a whole world of sort of culture, if you like. It makes you feel a bit sexy. Because you're important and you're needed. But anyway, yes, lots of us like the pressure. Never slide deck's not working neither, and they all lead to people coming along. And it's good to know, isn't it? There's real people out there. They all lead to these types of things. So you waste time chasing them and dealing with last minute stress. That's it. You waste time chasing those clients. We're prepared to sacrifice ourselves. We give up our time, our lives, our money, the time with the kids, the actual run up to Christmas. Some of us, we don't do the Christmas shopping and blah, blah, blah. And then it gets to those, those days in between Christmas and New Year, and you end up in the office trying to catch up. So we sacrifice ourselves, our Christmas and our January. You're forced to firefight instead of following a structured workflow. And one of the things that comes up a lot around that is the fear that accountants and bookkeepers have around making mistakes at that time of year. Because not only have you got the tax returns that you're doing, you've also got the VAT that need doing on either the 7th of January or the 7th of February. But then it creates a last season adrenaline loop where you're running around at the end of January. And as I say, that can become addictive. So if you keep having that, there's a part of your mental state, and you can look at the habit loop to see how this is formed. There's a great book called The Habit Loop by Dales Dulrig, and Atomic Habits by James Clear. But you can become addicted to the dopamine, and then therefore you go and search out for it again. But all of those, in summary, they lead to you feeling like you're responsible for everything. You're responsible for the team and your clients, and the fact that you're not at home, and that underlying thing about feeling like you're going to get found out. So you're feeling like you're going to make a mistake, or you're going to miss something, and you're going to end up with a PI claim, or you're going to miss a return and end up having to pay the penalty for them. So it's a question of working out and making sure that you're not going to get found out. Brilliant, Martin. Thank you for sharing. If it's not for you, it's not for you. And would rather you have a conscious yes, as we're going to talk about at the end, have a conscious yes and do something about it this year, rather than just drift through again. So what do most bookkeepers and accountants really want? Well, what you're looking for, what you want ultimately, is Christmas off and a more relaxing January. So you choose when you do the work. Yeah. So you can still work at Christmas and January if you want to, but it's a choice rather than you feeling you've got to have an obligation. You've got a practice that feels more in control and not in reaction mode. So, a practice that you actually want rather than having to firefight and react around things. Clients that are trained to behave like grown-ups, and we're going to come back to this again in a moment, but clients that are respectful of you, if you like, and there's a trust relationship there rather than ones that abuse you, or in your head abuse you, take advantage of you, so you have to run around and deal with them. And then ultimately a team that can carry on the process, not keep asking you every 5 minutes about the next question. So it's a systemized process where you feel in control, you feel more relaxed, you feel more respected, and you can make or take the choices that you like. If you like, it's like a practice that works on purpose. Now, let's have a look at the obstacles, the next thing. So these are the things that we have identified. There's 52 of them. I'm not going to go through all 52, but these are the things that we've identified that most accountants and bookkeepers need help with in order to get them over the tax return rush at the end of at the end of the year and January. And we've grouped them into 6 barriers. And the first group are client barriers. And there are 10 of those that we've got there roughly. And we've already covered some of them. And I'm going to give you the answers to some of them now in answering David's question. So the client barriers are all things that the client does or doesn't do around delivering their tax returns. So they ignore reminders, for example, and they leave everything until the deadline. That's pain 3. So you need a thing, a system or a process in order to help them not ignore those reminders. Pain 7, more time is wasted chasing bank statements, or you end up pain 8 with lots of crumpled receipts to sort through. There's more back and forth, more delays, more frustration. You need something in order to make sure that they do not, it's you in charge of the relationship rather than the client being in charge of the relationship. So David's asked, how do you get clients who are constantly late in delivering information to adhere to a timetable set by us? So again, this is a pretty common question. So my advice around that one, David, is that you have to say what you mean and mean what you say. Yeah. So you have to say what you mean and mean what you say. So you have to have clarity over what it is that you want the clients to do. And then once you've told them what it is that you want to do and the consequences of not doing it, then you need to stick to what that is. So for example, you want a client to deliver the information, all of the information for their tax returns by the 30th of September. Some people, it's 31st of October, somewhere around there. So you want all of the information delivered by then. Otherwise, you can't guarantee that the tax return will be completed on time. Now, the consequence of that is that the client suffers a penalty. So if they don't deliver the information by the 31st of October, the client suffers a penalty, or they go somewhere else and somebody else runs around like an idiot. Yep. So when you say what you mean and mean what you say, you tell them that it's got to be delivered by the 31st of October. And if they don't deliver it, then they're going to pay a fine. Yeah. Now, that is training them. Yeah. Now, the first year, you'll probably have, when we first did it, we had over 20, get the fines, moan at us, file the tax return, blah, 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 blah. But they didn't do it a second time around. Now, you can be more proactive than that if you want, and you can tell them that they're going to be dumped. Yeah, so if you don't deliver the information by the 30th of September, we aren't going to act for you anymore. Yeah, so you can proactively get rid of them out of the practice. Yeah, now, whilst you continue to tolerate it, you get what you tolerate. Whilst you continue to tolerate it, the clients will keep doing it. And most accountants and bookkeepers, the reason why we tolerate it is because we're in fear that client might turn around and go somewhere else, or they might go to the pub and bad mouthers, and in that fear we then go and end up sacrificing ourselves and end up working the Januaries. So you need to be conscious about your own self-time, your own self-respect, your own time. Set out a timetable, and once you've set that timetable out, you need to stick to it. And then Sarah's asked a similar question about how do you get your clients to bring the records in good time? Well, you need to tell them when you want them by. Tell them the consequences if you've not delivered it, and then make sure that you stick to it. Another really good one is a whole section around getting records in within the membership area that you can watch. Another really good one around getting records in is to book an appointment. It doesn't need to be a physical appointment. It could be a telephone appointment or a physical appointment. But let's say it's a telephone one, and you ring them up and say, right, we need your bank statements. Uh, can we meet on the 10th of 10 o'clock on the 6th of February or whatever? Not the 6th of February because that'll be after, but let's say the 6th of July. We're going to meet at 10 o'clock. And then they take photographs of the bank statements while you're on the call, or they email them through to you whilst they're on the call, or they download them off the website whilst you're on the call. And that fact of just having a deadline, just having an appointment in the diary means that you're much more likely to get the information from them. And so there are two ideas around how to get the information in. As I say, it's a big one. Our belief system around clients and what it is that we're prepared to do is a big one. If you can remove those client barriers, you've still got the other five that we'll talk about in a minute, but if you can remove those client barriers, have more self-belief, have more self-confidence, then it makes your world a whole lot easier. I've got a question that's just come in. I'm asking for 10 missing items and the client comes back with only 7 of them. So I'm not really sure what to do about the remaining 3. So again, you need to go back to them with clarity about those 3. So you could have a checklist system or whatever it is. But you ask for 10, they deliver 7. You then go back to them and ask for 3. Now, you could, when you ask for the 10, tell them if you don't send back all 10 at the same time, then there's going to be a surcharge or an extra charge or something like that. So there's some consequences off of the fact that they don't deliver you all the information. But you need to tell them, in my world, you need to tell them that. That up front. So it's a chasing process with clarity over the consequences if the client don't deliver the answers. So that's that one. That's that one done. Any other questions, please feel free. Oh, another one that I just thought about requesting information. So when we write to a client and ask them for something, we assume that they know what that looks like. So we might be asking them for a P45, for example, or a P60, or a P11D, or an authentication code, and we just assume that a client knows what a P60 looks like. Now, if you have a standard template of a P60 with the names blanked out, if you ask the client, or when you ask the client for the information, if you send them a picture of what one looks like, again, it will improve, it'll improve how likely they are to respond, because they don't want to come to you and ask you what a P60 looks like, because you've assumed that they know what it looks like, so they don't want to look stupid. So that's another really good way of getting information from clients more easily. So that's your client barriers. The next lot are your practice management barriers. And if you're still working and controlling your tax return system and your accounts production system and all the rest of it on Excel spreadsheets, it's really time that you've got sort of into the 21st century. So there are lots of problems with practice management. So sending random emails out. You send the emails out when you think about it, chasing information rather than it being systematically go out. There's no client deadlines, or you share. Another really silly one is if you keep talking about the 31st of January as the deadline, then clients will work to that deadline. So all of your process up until around about, in my world, up until around about September, shouldn't have the 31st of January mentioned in it at all. Okay. So the first time you mention the 31st of January is when you tell them, if you don't have the information by, let's say, the 31st of October, then we can't guarantee that your return will be filed by the 31st of January. But up until that point, all of the deadlines that you talk about are your deadlines, not the 31st of January filing deadline. And again, all of these different things. So you don't know which clients are at risk of missing deadlines because you haven't got a proper practice management system in place. Manual tracking leads to mistakes, especially if you're on an Excel spreadsheet. Clients have no motivation to submit early because you're not educating them as to why it's a good idea that they send the information in before the deadline. So pay the tax, get the tax return, get the unpaid tax coded out, etc., etc. So there are 10 more practice management barriers in there. Karen's asked, how much would you recommend to charge for a surcharge? Is it a percentage of the bill or a set fee? It's entirely up to you, Karen, but the object of the surcharge is it's got to be significant enough for the client to feel pain, and want to do something about it. So We've tried all sorts of different amounts over the year. £100, which equates to the filing penalty. What we think the extra overtime cost would be in order to do it. £250 was another one, but it needs to be penal for the client. Now, the reality of it is in lots of cases from Greenstone's perspective, which is my accountancy practice, we would surcharge the 250 quid or the £100. The client would ring up and go, why you sent me this bill, blah, blah, blah. We would explain it to them. And then the first time round, we'd raise a credit note and say, look, obviously misunderstanding around the information, misunderstanding around the communication. We'll surcharge you this time, but next year it will stand. So lots of them don't even pay the surcharge. Some of them just pay the surcharge because they just don't care, and therefore the surcharge isn't enough money. But the fact that they've had the surcharge and then we've credited it means that they're less likely to take the mickey the following year. And we've then got psychological and behavior barriers, and these are just as important for you as what they are the client. So we believe, number 22, look, we believe we work better under pressure. Yeah. You believe that putting off the reminders is just going to kick the can down the road. You're not believing that you can train clients to behave differently. Well, I know you can because we've seen it time and time and time again. You procrastinate and put stuff off as a big one. And that's one of the reasons why within the Tax Return Commitment Club, we have Get Shit Done sessions, which I'll talk to you about in a minute. So you turn up and you kind of make yourself get over that initial hurdle. It's one of the reasons why I have this clock on my desk. I have stuff and it goes on my to-do list and think, I don't really want to do that, or I'll do it next week, or I'll do it next tomorrow is a classic. I'll do it tomorrow, and tomorrow never comes. So what I do is I set myself a little timer that says, I'll just work on it for 25 minutes. And then once the 25 minutes is done, then I'll go and start something else. So it gets me over that procrastination of sort of not wanting to do stuff. And very often, again, I've shared this lots of times, very often once you get started, then it's a whole lot easier than what you imagine. Michelle shared on Friday of last week about how she was procrastinating about something last week and how she got over that through the getting shit done session. So anyway, psychological and behavior barriers. You've then got team barriers if you've got a team. So team members put it off. They've got all the same sort of stuff going on as what you've got. You've not got enough team to handle it. Team are not technically qualified enough. The workload is all given to one team member because they are brilliant at it. So there's a whole load of things around team that you can look at. There's no accountability around their key performance indicators. And those key performance indicators could be turnaround times and delivery times to clients, et cetera, et cetera. Sometimes tax returns feel a bit like number 41. Senior accountants stuck on admin instead of high value work because the tax return feels like a lot of admin. It feels like they're having to chase the client, which they don't need to do. That is a customer care challenge for them to do rather than a technical person to do. So you've got all these team barriers. You've then got technological barriers or process barriers, where you have clients that are sending information in all sorts of different ways. So some are on WhatsApp, some are on email, some are delivering them, some are uploading them in indexed or auto entry or HubDoc or whatever it is. So if they're coming in from all different sorts of directions, you can't systemize how you're dealing with them. Clients not setting up bank feeds, just never get round to it. You're not using email reminders or SMS notifications or WhatsApp notifications. There's a great video that I did with Keith Lesser, it's about 2 years ago now, where he's using WhatsApp in order to send out client reminders, because clients are much more likely to respond to something on a phone via text or WhatsApp rather than on a PC on email, because it's there, it's in their hand. They're there. They just get it done and get it out of the way. And then the last lot of barriers that we got are the external barriers. So this is stuff, generally speaking, that's outside of your control. However, there are things that you can do in order to make it more efficient. So HMRC delays in processing information, having to understand new rules or learn new things. So a client turns up and says, oh, I've just sold this piece of property, or I've just done this, I've just sold a work of art, and you have to go and learn about it. And then you've got clients that are affected by personal issues, illness, divorce, and you could be affected in that way as well. You've got year-end accounts where most accountants are earning the money. So they're sending invoices out once they've done the year end. So it's easier to get on with that because you've got cash in the bank. And then obviously you've got the bad weather and the Christmas parties and all the other stuff that goes on about it. Now, as much as they're external and it's more difficult to do things about that, there are definitely things you can do in order to get the tax returns filed earlier. You just have to start a bit earlier in order to make sure those things are dealt with. So, what can you do about these barriers? Okay. As I say, there's 52 of them there. Some of them you can bunch them up, and there are some really quick things that you can do. And I'm going to share two more before we disappear today. Two things that I think you should be doing now to get ready for the 6th of April. But what can you do about those barriers? And we've got lots of conversations with members, both within Bounce and Evolution and the Commitment Club, that have done things, they've changed things in order to move their practice on so they don't have to run around like blooming idiots in December and January. This is Jim. He couldn't believe, so he delegated all of the work to his team. He couldn't believe that he'd only got 5 tax returns left when he went and looked at it. This is Martine. All her tax returns had been done. Isaac had all got his done. And then David, who has shared with us the progress and the movement that he's made. And I've got his 2024 numbers. I've just not had a chance to update the slide. As 2025 numbers, I've just not had a chance to update the slide, which was slightly better. 92% David had in 2025. But you can see the movement and the progression as to how he's continually got better and got those tax returns out by the end of November. There's no magic wand. We're not going to sit here on the 6th of April, wave a magic wand, and all your tax returns will be filed, or 90% will be out to client for signature by the 30th of November. It can be a steady progress depending on how many tax returns that you've got. So anyway, right, let's have a look at what we might do with it. So firstly, just to get clarity, who we work with, practice owners based in the UK. We don't work with anybody outside of the UK. We've got a member in Ireland, and we're running a slightly different system with him. And obviously, we've got some members in Northern Ireland as well. Generally speaking, with up to 20 team members. So if your practice is bigger than that, tax return commitment club's not for you. They want more time in their lives and a whole lot of less stress. And as I say, there's two things that I'm going to share with you today that I think you should be doing now in order to start this ball rolling. But before I get to that, I just want to sort of go into how the Tax Return Commitment Club helps remove those barriers. And there are a number of things. I'm not going to talk to you about the features of it. I'm going to talk to you about the general way that it works. And the first one is that it forces, as much as it can, a monthly plan. And I'm going to show you something in a minute. We're now on the 3rd iteration of it. I'm going to show you something in a minute that helps you do that. But basically, the monthly meetings that we run forces you to think about it consciously each month, and it creates an element of urgency, and you have tasks and systems within those monthly plans in order to make sure that you are making the progress. It deals with, the Tax Return Commitment Club deals with the real blocker, and that's your behavior and the behavior of your clients. But ultimately, it's your behavior that is driving or allowing the behavior of the client. So you get what you tolerate. If you stop tolerating it, then you will start to get better behavior from the client, and therefore you won't have to run around. And it's just at this point, I'm just going to go over and look at Stacey's question. Stacey asked the question, how do you prioritize tax returns over other important tasks? So Stacey's question was, how do you prioritize tax returns over other important tasks? Now, this is effectively, it's a behavior problem, okay? If you behaved in a way where tax returns were more important than other tasks, then you would get more tax returns done. But this is what I've come up with, and there's 3 things. The first one is to remember that it's a marathon, not a sprint. So completing tax returns is a big job. It's monotonous, yeah? It's repetitive. It's a marathon, not a sprint, but you can create sprints within a marathon, okay? Which is basically break it down, yeah? Look after the pennies and the pounds look after themselves, yeah? So if you break the big job down into lots of little jobs, monthly targets, weekly targets, then all of a sudden you start to make progress during the course of the marathon and you end up finishing it. Another way of doing it is to turn it into a game. So every time you do something on a tax return, you file something, you move something on, you give yourself a point, score so many points, you give yourself a prize. Team do exactly this, exactly the same. And what we're introducing this year, again, this is the first time that we've done this. Another improvement. What we're introducing this year within the Tax Return Commitment Club is a weekly monitoring target about just one thing. Yeah, so each week the members are going to be tasked with doing just one thing to move their tax returns on. So it could be ringing a client, completing a tax return, downloading a P60, completing a P11D, sorting out a CIS fetch, whatever it is, but just one thing. And then each week we're going to ask the members to confirm whether they've done it or not, and we've got some internal targets in order to move it on. So it's that breaking the big problem down into lots of little problems in order to keep you moving, yeah? Plodding on, if you like. It's a marathon, not a sprint, but that doesn't mean that you can't have sprints within the marathon. The next one that I want to talk about is it makes productivity simple again. And it's like, again, I can go off into a whole world of stuff around this. So within the whole profession as a whole, it's very easy to collect ideas and add things onto your to-do list. What the Tax Return Commitment Club does is help remove some of that clutter and therefore helps you focus on the things that are important. You've also, within the Tax Return Commitment Club, got access to the Greenstones documentation that we use. And again, over the last 7 years, it is now that we've been doing this club, other members have contributed things to the club, and that's there for you to use as well. The whole idea is it gets the firm pulling in the one direction and moving forward. And the sheet that I'm going to show you in a moment, it can be shared with the team, and then the team can be competitive about it. We have a balloon thing that we help people use. There's a test tube thing. Can't remember the lady's name who's the member that had the test tube. Donna, I think it was. Had got a test tube with it on so everybody can see. So there's loads of ideas that we got around that. The club will train the customers through structure. We'll give you the letters to send out. We'll help you hold them accountable. It also helps, the club helps you be accountable because it's within a public arena, if you like, not a public arena, but a membership arena. So it helps people want to develop. And then it also includes the do the work sessions where people get stuck in, which it's kind of nuts when I think about it rationally. But because you're coming along, you've got time in the diary that we've put in your diary for you, and you're coming along and you've got that time where you have a bit of accountability because you have a conversation with somebody else, and then you actually get on and do it. It gets you over the hump. It's like a clock session, but on the internet. It just helps you move forward. And obviously you've got the community and being able to ask questions and all the rest of it in order to free you up. So I'm going to share with you now the two things that I recommend that you do as a consequence of today. I've got two more questions over here, and I've got another question at the top. On what aspects can we train the clients? How can the training be made effective and not make it seem like it's being too pushy? So it's a brilliant question. And it's something that lots of accountants are, I'm going to use the word concerned about, especially when they change things for the first time. So there's this a belief that I have that all people are good people. Yeah, all people are nice people, and people want to help each other. They want to be fair to each other. And very often, when we've sat down with customers to talk about the problems we've got with their systems and the way that they're delivering the paperwork, some of them have been mortified. Some of them they just can't believe that we've never had that conversation with them before, because if they'd have known, they want to help us help them. Yeah. So, very, very, unless you go, you will do this and you'll point your fingers and you wag at them and all the rest of it. But most often, nearly always, 99 times out of 100, probably 999 times out of 1,000, having the conversation with a client about how you can make the relationship work better, more fairly, they will like it. They will change their behavior. They will change their systems, the way that they deliver the information, and they will work with you. Yeah. If they don't, then they need getting out the door. And if they're not that interested, then I would argue certainly from my perspective, there's a breakdown in values, there's a disrespect, there's a lack of mutual trust, and you should probably be moving that client on as well. So, on the aspects of training the clients, the big one is delivery of information when you ask for the information. Yeah. And explaining to the client why it's important for them. So in order for me to help you, this is the information we need and why we need it. But very, very rarely does anybody say, oh, that's a bit pushy. Because people don't know. But anyway, Mark said, yeah, it was Donna that did the test tubey thing. If anybody's interested in that, we'll happily share it. There's a LinkedIn post as well where I shared it as well. But anyway, the two things that I'm going to tell you to do as a result of today, along with all the other ideas that we've already given you, is to make sure that you start planning now with dates in the diary. Yeah. So if you've got a team, get some time in the diary for you and the team to sit down and work out how you're going to make this year's tax return season a whole lot better than what it was last year. If you haven't got a team, get some time in the diary now in order for you to work out how you are going to make the tax return season a whole lot better this year. Yeah. So if you don't do anything at all, if you don't put the time in the diary, then before you know we are out with July, and then you'll be saying to yourself, well, I'm going on holiday next month or next week or next year, whatever, next month. I'll deal with it in September. And then you come back off September and there'll be a whole load of stuff that's happened over the summer. And before you know where you are, it'll be October half term. You'll be celebrating Halloween and fireworks night, and you'll be back in the November running around like I'm an idiot. So the first thing you need to do is to start planning and get some time and dates in the diary now in order to get going. I'm just going to have a quick drink. And then the second thing, which seems really obvious from an accountancy point of view, is to actually know your numbers. Yeah. Now, I don't need you to know them to the tax return because obviously you'll win some and lose some clients in between now and the end of January. But to get clarity over the numbers that you've got to file. So let's, for argument's sake, say it's 100 tax returns. You then know that you've got 90 tax returns to file. Sorry, send out to client for signature by the 30th of November. And you can start to plan and think about when your slacker times are in order to do those tax returns. So when we first did this tracker system, it was back in 2024, as you'll see. And basically all I did is said that there's 8 months to 90%, divided that by 8, and as you'll see, 11, 22, 33, we just did it pro rata. As a consequence of doing that, the members said, with the feedback that we got was, well, didn't really like that. We couldn't really stick to it because we have some time off over the summer and we were struggling to get 20%. And after we'd got all the CIS vouchers done, May was a bit of a low month because we'd got that done, or June was a bit of a low month because we was then waiting for P11Ds, etc., etc. So in 2025, we took that advice on board and we changed the percentages. So you got 11% and then 30%, and then it drops a bit. And then in July and August, when we're on holiday, it drops back again, and then it builds over consistently September. So that's what we did last year. And then the feedback that we've got, and nobody's seen this new one yet, we've taken stuff away rather than add stuff on. But the feedback we got last year was, well, that works very well for you, Simon, but I quite like working in August because everybody else is on holiday, and therefore I want to do more tax returns in August. Now, it's going to change and make it more difficult for us to hold you accountable. But on the 2026 checklist that's coming out this week, so you should have it, if you're a Tax Return Commitment Club member, you should have it by the end of this week. We haven't got, as you'll see, we haven't got any targets in there at all. And your first task is to go through and work out what percentage of those tax returns you need to do in order to make sure that you hit the 90% to clients for signature. So again, we're improving and we're building and we're working in a way to help you help yourself. So they're the two things that my recommendation as a consequence today, put the time in the diary and then start working out what your numbers are. And then you will remove and start to get rid of the biggest mistakes that I believe accountants make when it comes to tax returns. And the first one, the top one, is being in the comfort of chaos. Yeah, that's just how it is. And then the second one, which is another really big one, is being afraid of clients. Yeah, and that couple of questions have come up today. It's about what if a client thinks we're pushy, or what if a client doesn't like it? Well, you have to choose your hard in that scenario, yeah? Either you're going to be running around like an idiot in January, or you're going to have a client that's a little bit upset with you at the moment because you're trying to help them be the best that they can be. you want to be the hero, yeah? It's like, I'm the savior. Yeah, it's like I've pulled out all the stops and I've saved my client. I can guarantee you, no client goes to the pub on the 31st of January and goes, my accountant is brilliant. I gave him the information at whatever time it was yesterday, and 10 past 11 last night, they emailed me the tax return for me to sign the tax return. They do not talk about you like that. It's like you're not their hero when it comes to the tax return. All you've done is remove some admin from their desk. We need to stop enjoying the adrenaline. You can get your adrenaline in any way, shape, form you want to. You don't need to be doing it at 2 minutes to midnight on the 31st of January. We have this fear of clients leaving. Now, within the bounce, we've got all sorts of ways to help you get more clients, but the fear of clients leaving, and I will caveat some of the things I've said today. If you have clients that are financially significant to the success of your practice, we still have some at Greenstones, then we allow them, we make exceptions for them in order for us to deliver a service in the way that they want to. Yeah, but they are the exception rather than the rules. You need to get out of this habit of believing that it's a one-off, that it will be different next year. So I'll just do it this year because next year will be different. And then this being afraid to get things wrong. And we need to stop being afraid. We need to be more confident in ourselves. And if we're not confident in what it is that we're doing, we either need to give it to somebody else to do, or we need to go out and find some support. So I am nearly finished now on the party aspect of it. We're going to come back in a minute to some questions. I've got two more questions there, and I've got another question that's gone into the Q&A box. But if you've got any questions you would like me to ask around the Tax Return Commitment Club or the process of having your tax returns out to your clients in the most efficient way, please feel free to post them and I'll answer them before you disappear. So this is effectively what the club does. We ask you to look at what you currently have, which we kind of looked at today with the problems and the pains. We then ask you to look at what you actually want. Yeah. So do you really want Christmas off? Do you really want January as a more relaxing time? More productive time, whatever language you want to call it. Yeah. And if you don't, fair enough, it's not for you. We then look at the specific things, the obstacles that are stopping you getting from where you are now to where you want to go. And then ultimately the club helps you get over them. And we do that by looking at impact, which we've talked about a lot now. Impact stands for intentions. So working out what it is that you want, the mindset around those intentions, productivity in order to help you through the mindset in order to get to your intentions all together, which is the team aspect, and then your customers and turnover, being financially rewarded for what it is that you are doing and the work that you are doing. This is Bounce, yeah? And within Bounce is Tax Return Commitment Club, and the extra things that you get are all of the 2024 systems and resources. So back in 2024, when we relaunched the Tax Return Commitment Club, I shared a whole load of things about how to get information in, systems and processes that you can use, language that you can use in order to get records in on time. There was about 6 different webinars that we did. I'm sure there was 6, there might have been 5 mindset challenges and how you can get rid of the fear and to be courageous around it, etc. So you get all of those systems. In fact, I've got a list here to automate the tax return process, how to get information in from your clients, the 2024 launch party around procrastination. So there's an equation called the procrastination equation that helps you understand why you procrastinate around things, and then all of the Greenstones tax return systems. And as I said, there's lots of members things in there as well. This year, you're going to get at least six meetings, plus the getting shit done meetings, plus a reset in September and November and potentially December. Then we've moved them around since I did this slide in order to, instead of them doing them in the impact order, in order to make sure that they come out in a way that's the most benefit to you. And obviously you get the tax return checker. Now the tax return commitment club is part of Bounce. Yeah. So in addition to the tax return commitment club, you get all of the things within Bounce. So you get the impact meetings, you get the connect meetings, you get the WhatsApp group, etc. And there's way too much for me to go into today around all of that sort of stuff. So in a minute, Mark's going to put a link to his Calendly diary in the chat box. In fact, it's just appeared. if you would like to, or when you would like to find out more information about the Tax Return Commitment Club and how that works with Bounce, if you click that link and book 20 minutes with Mark, Mark will go through that with you. There's 100% money back guarantee, no notice period, no minimum periods, contract periods, and all that sort of stuff. So you can have a no obligation conversation with Mark and see how we can help you improve on those tax return processes and all the other things that are challenges with you within your practice. Because as you know, the value and quality of any event, training, webinar, course can only be determined by the action that you take after it. So it's all lovely coming along and going, oh, that was really nice. I learned something there. I'm going to change it. I'm going to take the 31st of January deadline out of my diary or out of my client letters or whatever. Yeah. But if you don't do that, then today's just basically been a waste of time. And as a consequence of today, you effectively have two choices. You can consciously do nothing. And I am more than happy for people to do that. As Martin said at the beginning of today, this is not for me. If it's not for you, then please just consciously decide it's not for you and don't take it forward. It just saves everybody a load of time and ultimately you a load of money as well. So you can consciously do nothing, or you can consciously decide to do something. And if you're in the Tax Return Commitment Club already, if you're within Bounce, then you've already consciously decided to do something. And I can't wait, as I know Mark can't wait to get you started. To get some momentum going. If you're not in the Tax Return Commitment Club or not in Bounce, then just click that link with Mark and book a time with him and have a conversation about how that will help you move your tax return processes forward. So as I say, you've got two choices: either decide consciously to do something or consciously not do something. So that link is in the chat box. I'm just going to answer these next two questions, and then we're done. So if anybody's got any questions, please pop them in the Q&A box, and I will gladly answer them. So Andrew said, I was going to ask about team alignment, but I see there's a section on this. Yeah, there's a whole thing within the commitment club around being all together in the team and the targets and the key performance indicators and the engagement of the team in order to make sure that they keep moving it on. And then Tracy's asked, I'm intrigued how you change the client mindset for urgency. And so I think it will be great for both tax returns and accounts. Very much so. Everything we talk about within the Tax Return Commitment Club will go over to accounts. But to change the client mindset and create some urgency, the simplest thing you can do, and I've already talked about it, the simplest thing you can do is just take that 31st of January deadline out of it, yeah, and give them your deadline. Whether it be the 31st of July or the 31st of August or whatever it is, and then they will work to that deadline rather than seeing a load of dates and then the 31st of January deadline that the tax return people talk about. The HMRC is the name of the people I was trying to think about. Yeah, which just kicks it off and bounces it down the line. So I've got one more question before we just round up. Joanne's asked, should we segment into type of returns? Maybe move all PAY-based returns by the 30th of June, as their information could be available earlier. Definitely, Joanne. Yeah. So we have a little thing at Greenstone, a little thing where we break down and we segment the easy returns. We have, as I said, we have some financially successful clients that are financially significant to the practice, and we know that they'll deliver their information. They'll sort it out over Christmas, and they'll deliver the information in January. They will have had the tax estimates and all the rest of it because we've got the majority of the information. It's things like bank interest and stuff like that. We've got the majority of the information at the beginning of the tax year, and they've already had the estimates. So their sort of desire, if you like, to get the return filed is almost zero. It's just an aggravation. So we know in those scenarios, we save those until the end. We've got lots of clients that got little limited companies. They've got a P60, a bit of dividend, bit of bank interest, so they're really easy to do. So we focus on those. CIS clients, obviously, at the beginning, really, because they're keen to get their tax refunds, so we focus on them at the beginning. And then we've got other clients, D-grade clients, that don't particularly want to give us their accounts, so we know we're not going to get their accounts until, say, August, and therefore there's no point chasing them for their tax return information in April, May and June, because we can't do it anyway, because we've not had their accounts, we can't do the director's loan, blah, 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 blah. So yes, wholeheartedly. If you can segment the clients into ones that you know will be easier to do at the time of year when it is that you can do them, then that's a whole lot better. So just get rid of that. And then Joanne's asked about she's definitely there. So yeah, that's all the questions I've got. So just to leave you then and say thank you very much for coming along. I hope I've given you lots of inspiration. Um, Sometimes it's like this morning I woke up with, I'm really excited about the Tax Return Commitment Club. I know it's difficult sometimes to get excited about tax returns, but actually making that process and doing something with it is for me, is a really exciting thing. So, and if as a consequence today you do nothing other than start planning now with the dates in your diary in order to make sure that you are ahead this year compared to where you were last year, just be that little bit further ahead so you're that little bit more relaxed, got a little bit more under control, then please do. And ultimately, know your numbers. Because if you haven't got control of your numbers, if you don't know what the numbers are, if you don't know what direction it is that you're going in, you can't even say, I've got 100 returns, that's 2 a week or 3 a week over the next 9 months in order to hit that target. And without that, then you'll keep on making the same old mistakes that people are making every year and then moaning about it. And the most that that does is give you a post on LinkedIn, basically, and lots of other accountants saying, yeah, how brilliant they are and all the rest of it. But anyway, and that's it. So that is it for the launch of the 2026/27 Tax Return Commitment Club. It all kicks off on the 6th of April. The following week is where we'll start monitoring the numbers and all the rest of it. And as I said, if you want to be in, or if you just want to have a conversation with us about how it would work for you, then please click that link and make sure that you have a conversation with Mark. If you're already ready to join Bounce, Mark's put the sign-up process in the chat box for you as well, so you can go away and look. Just check the questions, no more questions. So I will say thank you very much, and I can't wait to see you all get your tax returns out to your client for signature by the 30th of November. Bye-bye for now. Bye-bye, bye-bye, bye-bye. Thank you for watching this recording of the 2026 Tax Return Commitment Club launch party. As always, if you've got any questions or comments, please feel free to post them below the video and I'll gladly answer them. Hit the like button if you've got value, and remember to subscribe to the channel so you get notified the next time we upload a video. On the screen now, you should see 2 videos that we recommend you watch next to be inspired, challenged and supported to be the best accountant and bookkeeper you can be.